So these are advanced questions. I have received an email from my student and my subscriber. His name is Mohit, and I have copy pasted the email here. So let us see what are his questions. I personally feel these are advanced questions. Dear Rohit, I hope this message finds you well. Congratulations on your achievement of becoming a SEBI registered analyst. I had a few questions regarding stock filtering and market strength. So Mohit is the one who has sent these questions. While tracking market strength using the number of stocks in the filter, do you include BSE listed stocks as well? Because they come regularly in the Minervini filter. So he's talking about this. So if I go to the breakout, so he's talking about this number. When we use this filter, this evergreen filter, which I have discussed many times on this channel, he's talking about this number. If you scan the market daily using the same filter, and if you see this number decreasing on a daily basis, that means the market strength is declining. If you see this number increasing on a daily basis, that means the market breadth or the market strength is improving because the filter is not changing. So, how come this number is changing? It's because if money is coming into stocks, this number will go up. If money is going away from stocks, this number will go down. That's what he's talking about. That is why I said this is an advanced question. So, do you include BSE listed stocks as well? So, in India, there are two exchanges, BSE and NSE. Now, we all know that the turnover or the volume on NSE is more than the volume on BSE. So, for liquidity reasons, I personally stay away from stocks which are not listed on the NSE. Most stocks you will find are listed on both BSE and NSE, but there are some stocks that are only listed on BSE, they are not listed on NSE. So I reject those stocks for liquidity reasons. This they come regularly in the Minervini filter. I can understand that. But the answer to this question lies in this. Everything comes back to this. I do liquidity analysis. One of the criteria here is only NSE listed stocks just to be safe. I don't want to be in stocks that are illiquid and volatile and are not on the national stock exchange. Okay. You can go to Google or ChatGPT and compare NSE, BSE in terms of volume, turnover. You will understand that NSE has got much bigger volume and turnover than BSE. That is the reason why I stay away from such stocks. Number two, can a stock be considered a leader if its average daily volume is below 1 lakh shares and its average rupee volume is below 1 crore, but it has good relative strength, fundamentals, and top in market cap? So, he has mentioned three things here. It has good relative strength and market cap. That is a part of comparative. So, this is strong. He also writes fundamentals. So, comparative and fundamentals are strong, but liquidity is poor. So, for example, the number of shares traded are 1 lakh or less. Average rupee volume is less than 1 crore. So, I will reject the stock because even if the comparative and the fundamentals are strong, my question is if the fundamentals of the company is good, it is a listed entity, and it has good comparatives. I mean, like people must be buying the stock. Otherwise, why would it have good comparatives, right? So, if people are buying the stock, if the company is fundamentally good, then why is the liquidity low? Why is the liquidity less than 1 lakh shares? Why is it that not more than 1 crore rupees is coming into the stock? Which means On a relative basis, the liquidity is low. And on absolute basis, the liquidity might be high. Looking at the stock could be a very small stock. So the answer again, we come back to this orange trading framework. If the liquidity is poor, I will stay away from the stock because I don't want to put additional risk in the portfolio. Another thing I wanted to discuss with all of you here is, see these 67 stocks in this. In India, you have CNX 500 index. And if you go to ChatGPT and you type CNX 500, you will come to know that 95 to 97% of total market capitalization of India is in top 500 stocks. You can check it online. And the total stocks here are 5,417. So out of 5,417, the top 500 stocks contribute 97% to the total market capitalization of India. And within that CNX 500, 65, almost 65% of the total market capitalization is in Nifty 50. So you understand how this market is so concentrated. The higher you go up the ladder, the more concentration is there in terms of market capitalization. So if you decide that if you only want to stick to CNX 500 because all the money is there, and if you put a filter like, let's say, market index, you go to Nifty 500, you save this, and you go here, you see from 67, it goes to 27, which means out of 67, only 27 stocks belong to the CNX 500 list. The remaining 40 stocks are sub 500. So they might have even lower liquidity, right? They do not contribute to the overall market capitalization of India in a way that the CNX 500 stocks do. So if you want to be even more strict, even more safe, you could use CNX 500 as the index. It doesn't matter whether this is a small number. Anyways, you want to buy only one or two good stocks, right? Uh, in a week or maybe in a month for that matter. If your goal is to only buy one or two good stocks in a week or in a month, if the market is under pressure, then you really don't need 67 stocks here. So you could choose to go with CNX 500 to narrow down your research even further. I personally don't use that because in William O'Neill's book, it is clearly written that the market capitalization does not matter. But liquidity does matter. Even if you look at William O'Neill's filter in MarketSmith website, I think the stocks which are trading below 12 rupees or below 1 crore, they are not accepted. So liquidity matters. Market cap, we are not giving much weightage to the market cap. Okay. These are two different things, liquidity and market cap. Coming to the next question. That's why I feel that these are advanced questions. A beginner cannot ask these questions. Since the accumulation distribution rating in MarketSmith is a proprietary metric and its calculation is not transparent, have you considered turning it off in your filter? So you go, well, let's go to the filters. He's talking about this buyer demand A or B. Now, MarketSmith does not tell us how they come up with these values. So he's asking why to use this filter if they don't tell us how they come up with these values. Price strength we know, group rank we know, SMR we know to a certain extent, earnings also we know to a certain extent. Buyer demand, they are not transparent about how they come up with the values. However, there is enough documentation uh, dating back to the 60s in which they mention that whatever formula they are using, the stocks that come in these two categories are the ones that are most likely to be the leaders. So there is documentary evidence for this. I am not concerned about the formula. If stocks which have been categorized as A and B in the past, decade after decade, if they have shown good performance, if they have shown leadership in the market, it is better to stick to A and B so that we put the odds of success in our favor. That is why I have not turned off this. In the past, I have tried using C in my filters. I have noticed that most of those stocks are most likely to hit your stop loss. So there is not only documentary evidence, but also my personal experience behind this. You will also notice that earlier in my videos, I used to use 70 as the minimum relative strength. That is as per Mark Minervini's trend template. But very recently, I started sticking to the 80 to 99 range because even Mark Minervini says that most of his winners they generally had 80 or more relative strength. So why to take additional risk? And in William O'Neill's book, it is written that the average relative strength of past leaders has been 87. So if you have two, three stocks in your portfolio and the average relative strength of those stocks is more than 87, that portfolio is likely to do well in terms of performance, right? So that is my response to these three questions. I will not switch off that rating. It's very important. Looking forward to your insights. Regards, Mohit. So, very interesting questions. That is my take on these three questions. Thank you so much.